Hello everyone, this is Jennifer. In this video we're going to look into the analysis of financial statement. So what do you mean by financial statement analysis? It is basically a systematic process of analyzing the financial information in the financial statements to understand and take the economic decisions. So if you look into your financial statement, you have your record data that is there in the form of profit and loss account or in the form of balance sheet. But do you understand what is the reason behind it? What does it tell, or what does it depicts of the financial position of the concern or the profitability position of the concern? So to understand that, we analyze the data. So who needs to understand it? For whom are we analyzing the data? We are analyzing the data for the interested parties of the companies, like the top level management, investors, creditors, labor unions, debtors, etc. So when we are analyzing the financial statement, what do we get to know? We get to know a lot of things about the companies. What is happening in the company? Is the company going profitable? What is the solvency position of the company? What is the credit time of the company? What is the debt collection period of the company? So by analyzing the data, we come into a clarification and we are able to have a clear picture of the firm's position and the performance. So analysis attempt to study the relationship between the different items of the financial data and the factors. So whatever item is important respective to understanding, we take that item and we compare or we study the relationship of the items with reference to the financial year or the financial data available in order to understand the relationship between components of the financial statement. So as per John, financial statement analysis is largely a study of relationship among the various financial facts in a business is disclosed by a single set of statement and a study of the trend of these factors as shown in a series of statements. So basically we analyze or study the relationship among the various financial facts in a business. For example, when we are looking into our current ratio, so the current ratio analysis also is a kind of financial statement analysis. So when you look into your current ratio, so the current ratio formula is current assets divided by the current liabilities. So this ratio basically tells the company's commitment to meet its short-term liabilities. So in current assets, what all we take, whatever assets which can be converted into cash within a year's time are taken as current assets, and whatever liabilities which are payable within a year are taken as current liabilities. So when you divide current assets by current liabilities, we get to know the short-term solvency position of the concern. So that is what it is telling. It is a study of relationship among the various financial factors or facts in a business, and it is disclosed by a single statement, and it also shows the trend of these factors, the changes of these factors in a series of these statements. So what are the objective of financial statement analysis? So the various objective to do the financial statement analysis is, the first one is to examine the earning capacity and efficiency of various business activity with the help of income statement. So what is the earning capacity of the business concerned, or different business activity which are operating in the business, that will be understood, and also to estimate the performance efficiency, whether it is performing in a profitable way or not, and the managerial ability of the management, and also it helps us to determine the short term and long term solvency of the business with the help of your balance sheet, and it helps us to inquire about the financial position and ability to pay of the concerns seeking loans and credits. So these are very, very normal or general things that we ourselves know. Why do we do financial statement analysis? To understand the financial position, whether a company is able to pay off its debts, whether the company has a good solvency position in the business, whether the company is having a good earning capacity in the business, whether there's a performance efficiency of the company, and to determine the profitability and future aspects of the concern. It helps us in understanding whether the company is running into a profitable position and what can be looked forward in the concern, to investigate the future potential of the concern. So it also helps us to understand the opportunities available for the concern to explore, to make comparative study of the operational efficiency of similar concerns engaged in the identical industry. So we can also compare our operational efficiency with another company's operational efficiency easily. For example, if you look into your current ratio, as I told, our ratio will be easily compared with the other company's ratio. Instead of going and understanding each assets and liabilities which each other, just the ratio is enough to understand the efficiency of two concerns. So the methods of financial analysis: for analyzing the financial data and interpreting them in a systematic manner, a number of techniques or tools are available. So all this we will be studying in our management accounting. So first we look into the comparative financial statement. So comparative financial statement, so under comparative financial statement, basically you have two things. One is your comparative income statement, the other one is your comparative balance sheet. So comparative income statement is a statement prepared to compare the various items of the income statement. What does an income statement mean? A profit and loss account. So basically we are comparing the various items of an income statement of different periods in order to ascertain the changes. Different periods in sense there are 2 years. So you will compare what is our current position with comparison to our previous years. So your previous year will be known as the base year, your current year will be your current financial year. So by this we will get to know whether there is an increase or decrease in the factors or the items of the income statement from one period to another period, which interprets the comparative income statement. So the format of comparative income statement of profit and loss account are, so basically your heading will be comparative statement of profit and loss for the years ended 31st March. So whatever year they give, the oldest year will be your base year, which here it is 2012, and the current year will be 2030. So you have basically 6 columns. The first column is particulars, second is your note numbers, working notes if you have, third is your base year, which is 2011 to 12, and second is your current year, which is 2012 to 13. Next you have absolute change, which is an increase or a decrease, and the last column is your percentage change. So the increase or decrease we put it in the form of percentage. So first we start with our revenue part. So we always start with revenue from operations. Revenue from operations basically includes any form of revenue by way of sale of products or services or any other operating revenue. Only operating revenue, I again repeat. So one important revenue from operation is your sales. Next you have your other incomes. Other incomes is nothing but the revenues which are other than revenue from operations, like your interest or any other financial services revenue. Next, when you add your revenue from operations and other income, you get your total revenue. So we are done with our first part, which is our revenue. Moving on to our second part, which is our expenses. So under expenses you have cost of goods or materials consumed. So cost of material consumed means the cost of raw materials which are used in order to produce a finished products. It basically includes all the cost of raw materials, the landed cost of raw materials used, but it does not include the overheads incurred in the production purposes. So sometimes instead of giving cost of materials, purchases, change in inventories, they might give cost of goods sold directly. So at that time, what does cost of goods sold means? It basically includes the cost of material consumed as well as the other overheads. So here we, as per the format, we have the cost of material consumed, the raw materials cost. Then you have the purchases of stock and trade, if any purchases are made during the year. Changes in inventories of finished goods. Changes in inventories is nothing but your opening stock minus your closing stock. So changes in inventories of finished goods, work in progress, and stock in trade is nothing but opening stock minus closing stock. Next we have the employee benefit expenses. The employee benefit expenses is expenses related to the employees of the concerns, like salaries, wages, contribution to provident fund, any other fund, etc. So next we have the financial cost. Financial cost are basically generally classified into interest expenses or other borrowing cost, okay, which are related to raising finance of the company. For example, uh, a debenture is being issued by a company. At that time, debenture interest will be paid to the debentures holders. So the debenture interest will become a finance cost for the company. So that is part of finance cost. Next we have the depreciation and amortization expenses. So this heading comprises of depreciation on account of any tangible assets along with the amounts written off or amortized during the year. Next we have other expenses, so which all doesn't come under this categories will be termed as other expenses. Next we have the total expenses. You total up all your expenditure part and you get to know your total expenses. Next we have profits before tax. How do you get profit before taxes? Total revenue minus your total expenses. Then you have tax, if there are any tax you can put it here, and next we have profits after tax. So by this we end our income statement. So let's look into our first problem. From the following information, prepare a comparative income statement. So they have given particulars, they have given 2 years. So what will be your base year? The oldest year, which is 2003. The current year will be 2004. So in our first question we have sales. For the base year they have given 20 lakhs and for the current year it is 16 lakhs. Cost of goods they have given, administrative expenses, selling and distributive expenses, other expenses, and finally they have given income tax. So we'll start with our comparative income statement. So first what we start with is the revenue from operation. Revenue from operation is nothing but your sales, okay. So the cost of goods sold, administrative expenses, selling and distribution, all these are expenses. Other income also will be part of your revenue and income tax will come at the end. So revenue from operation, for your base year they have given 20 lakhs and for the current year they have given 16 lakhs. So how do you find out increase or decrease? 20 lakhs was last year. This year it is 16 lakhs. If you see, it has decreased. So it is minus 4 lakhs. How much is your decrease? 4 lakhs. And increase or decrease percentage is your last column. How do you find out your increase or decrease percentages? Your changes divided by your base year amount. For example, if you see, your base year is how much? 20 lakhs and your changes is 4 lakhs. So 4 lakhs divided by 20 lakhs is how much do you get? 0.2. This 0.2 you're supposed to show it in percentage. So 0.2 into 100, how much do you get? 20%. So that is how we are doing the changes divided by the base year amount. Moving on to your next particulars is other income. So you have last year it is 80,000, current year it is 40,000. Whatever is given in the question, take it as it is. So your increase or decrease is 40,000. It has decreased by 40,000. So minus 40,000. So your percentage is 40,000 divided by 80,000 into 100%. You get 50%. So your total revenue, add up your total. And while you're calculating your changes, do calculate your changes instead of totaling it up. Okay, don't total it up for your changes and changes percentage, but do it in the normal way how we used to do it. That is 20 lakh 80,000 minus 16 lakh 40,000, you get minus 4 lakh 40,000, which is a decrease. So you're writing it in a negative figure. And percentage decreases 4 lakh 40,000 divided by 20 lakh 80,000, which you get 21.815%. All these are in minus sign because it has decreased. Okay, now moving on to your expenses side. Here they have put it in different headings as operating expenses, other operating expense. If you want, you can put it directly all the expenses. So you have cost of goods sold. Last year it is 12 lakhs, the current year it is 8 lakhs. So your changes is minus 4 lakh because it has decreased. So minus 4 lakhs. So 4 lakhs divided by 12 lakhs into 100%, you get 33.33%. Administrative expenses, last year it is 2 lakhs, the current year it is 1 lakh 40,000. So your changes is minus 60,000. So 60,000 divided by 2 lakh into 100, you get 30%. Selling and distribution expenses, last year it is 2 lakhs, the current year it is 1 lakh 40,000. So you get 60,000 as your decrease, minus 60,000. So 60,000 divided by 2 lakhs, which is equal to 30% again. So your total expenses is 16 lakhs for the last year, and the current year it is 10 lakh 80,000, and 16 lakhs minus 10 lakh 80,000, it is minus 5 lakh and 20,000. So your percentage increase or decrease is minus 5 lakh 20,000 divided by 16 lakhs into 100. You get 32.50%. Profits before tax is nothing but your total revenue minus total expenses. So 20 lakh 80,000 minus 16 lakh, you get 4 lakh 80,000. 16 lakh 40,000 minus 10 lakh 80,000, you get 5 lakh and 60,000. So your percentage increase or decreases 4 lakh 40,000 and 5 lakh and 20,000. So when you minus it, you get plus. It changes, the sign changes. Minus into minus, you have getting minus into minus, plus, plus into minus, minus, you subtract it, but you take the value of the higher, the sign of the higher value. So you get plus 80,000, and your increase or decrease percentage is 80,000 divided by 4 lakh 80,000 into 100, which is 16.67%. Your income tax is 2 lakh 40,000, 1 lakh 80,000. So 2 lakh 40,000 minus 1 lakh 80,000, 60,000 is your increase or decrease. So your percentage of increase or decrease is 60,000 divided by 2 lakh 40,000 into 100 is 25%. So profit after taxes 2 lakh 40,000, which is 4 lakh 80,000 minus 2 lakh 40,000, you get 2 lakh 40,000. 5 lakh 60,000 minus 1 lakh 80,000, you get 3 lakh and 80,000. 80,000 minus 60,000. So here we are supposed to minus it. So minus into minus will become plus. Plus into plus is plus. So you will take the higher value signature, which is plus, and you will add both. So 8 plus 6 is 14. So 1 lakh and 40,000. So your percentage increase. So if you see here, only here there is a percentage increase. Last year it is 2 lakh 40,000. The current year it is 3,80,000. So if you see that it's basically a increase. So it is 1,40,000. So 1,40,000 divided by 2,40,000 into 100, you get 58.33%. When it's an increase, you put it in the plus sign. So moving on to your next question. So next question, the profit and loss account of a company is given below. You have your profit and loss account given in the question. You have all the expenses being debited, all the incomes being credited. So here if you see, the net profit will not be considered in your profit and loss in comparative income statement. Only whatever is the expenses and the incomes, only that will be considered. So let us look into our solution part, comparative income statement. So revenue from operation, last year it is 8 lakh, the current year it is 10 lakh. The increase is 2 lakh. Okay, percentage of increase is 2 lakh divided by 8 lakh, which is 25%. Other incomes, so in the question they have given 50,000 is base year and 1 lakh is current year. Suppose increase or decrease is 50,000, which is a increase. 50,000 minus 1 lakh is 50,000 is increase. By looking at itself, you should know, not just by taking the sign. By looking itself, if the increase, it is a plus sign. If it is a decrease, we'll put it in minus sign. So percentage increase is 50,000 divided by 50,000 into 100, which is a 100% increase. Your total revenue is 8,50,000 and 11 lakhs. So total up your revenue and you get increase is 8,50,000 minus 11 lakh, 2,50,000 is your increase, which is in plus sign. So 2,50,000 divided by 8,50,000, which is 29.41%. So your operating expenses, if you see in your balance sheet, you have cost, in your profit and loss account, you have cost of goods sold, administrative expenses, selling expense, loss on sale of asset. All these are expenses, but loss on sale of assets will be considered under other expenses. So cost of goods sold, last year it is 6 lakhs, the current year it is 7,50,000. So your increase is how much? 1,50,000, which is in plus sign. So 1,50,000 divided by 6 lakhs into 100, which is 25%. Administrative expenses is, last year it is 30,000, the current year it is 40,000. The increase is 10,000. Your increase percentage is 10,000 divided by 30,000 into 100, which is 33.33%. Your selling expenses, last year it is 40,000, the current year it is 50,000. So it's an increase of 10,000. So increase percentage is 10,000 divided by 40,000 into 100, which is 25%. Other expenses, last year it is 30,000, the current year it is 40,000. So which is an increase of 10,000. The increase percentage is 10,000 divided by 30,000 into 100, which is 33.33%. So your total expense, when you add your total expenses, you will get 7 lakh and 8,80,000. So 8,80,000 and last year it is 7 lakhs. You get an increase of 1,80,000. So 1,80,000 divided by 7 lakh into 100, you get 25.7%. So your profit before tax is nothing but your total revenue minus your total expenses. So 8,50,000 minus 7 lakh, which is 1,50,000. 11 lakh minus 8,80,000, which is 2,20,000. So 2,20,000 minus 1,50,000, which is 70,000 is your increase. Put it in plus sign. So 70,000 divided by 1,50,000, which is 46.67% is your increase. You do not have tax, so you stop here with profits before tax. So this is your comparative income statement. Thank you everyone.